So you've passed your CMAP, you've decided to go self-employed, and you now hit a wall that nobody warned you about, which is choosing a mortgage network. You start Googling, and within an hour, you are drowning in it. One network, it promises the highest commission split that has ever existed. Another promises the best leads, and the third promises the best compliance. And they all sound brilliant on their own website, which of course makes complete sense because they all wrote their own website. And the more you read, the more you realize something pretty uncomfortable. Whichever one you pick, you're about to tie your entire income, your compliance, your professional reputation to a company you barely understand. And that's what I need you to grasp before you sign anything at all. You are not choosing a network, you are choosing who you're tied to when something goes wrong. And almost everybody chooses it completely on the wrong thing. So let me give you the honest guide. There's no sponsorship here, there's no affiliate deal here. I just want to show you how to actually choose the right network for you. In this video, I'm going to explain what a network actually does, how they make their money, how the commission splits really work, and why the headline split is basically a lie. I'll cover what compliance support you're actually going to be paying for, whether a network will actually ever give you leads, how to compare them side by side, the red flags that should make you run a mile, and how to get out of it if you've picked the wrong one. And I'll keep coming back to one idea because it'll save you from the most expensive mistake that new brokers make. The cheapest network is almost never the right network, and the highest split is almost never the best deal. So let's jump into it. So let's deal with the question you actually typed into Google first, which is what is the best mortgage network in the UK? And you've probably come across the big names. So Primus, Stonebridge, Openwork, Quilter, Mortgage Advice Bureau, HLP, Sesame, The Right Mortgage, the ones that dominate the league tables. I'm not going to tell you which one of them is best because, well, there isn't one. There's only the best network for you, and anyone who gives you a single one-size-fits-all answer is either being lazy or they're being paid. And the network that's perfect for a brand new mortgage broker who needs hand-holding is the wrong network for an experienced producer who just wants high splits and to be left alone. So stop looking for the best and start looking for the best fit. That's the entire game here. Now, to give regulated mortgage advice in the UK, you have to be authorized by the FCA. And there are two ways that you can get authorization. Now, the first is to become directly authorized. It's what we call DA. And so you apply to the FCA yourself, you hold your own permissions, you run your own compliance, and you answer directly to the regulator. It's total freedom, total responsibility. The second is to join a network. Now, the network already holds the FCA authorization, and it lets you operate under its umbrella as what they call an appointed representative, or you might see this called an AR. Now, you advise under the client's network's permissions using their compliance framework with their oversight. Think of it like this way. If you think going directly authorized, it's like owning your own house. You have total control, but you fix the boiler, you sort the insurance, you handle absolutely everything. Joining the network, though, is like renting a very well-run, nice service apartment. There is less freedom, but the maintenance, the security, the paperwork, it's all handled for you, but it's for a fee. Now, for a brand new mortgage broker, a network is almost always 99.99999% of the time always going to be the right starting point. Going DA from day one with no experience running compliance is like learning to drive a Formula One car. You can go DA later once you actually know what you're doing, if that's the idea, and that can be a brilliant move for the right people when they're ready. But at the start, the network gives you a safety net you genuinely need. So for the rest of this video, we're going to be talking about how to choose that network. Now, here's a framing within this whole thing that's going to keep you safe. Every network in the country oversells two things and undersells two things. Once you can see that pattern, by the way, you cannot be sold to. So they oversell the commission split, and if they provide leads as well, they oversell the leads. And they quietly undersell the compliance support and the exit terms, which are the two things that actually decide whether you got a career in 5 years' time or not. Now, let's take them in order because the order is the trap. The commission split first. This is the bit that everybody fixates on, and it's where most people get completely burnt. A commission split is just how the income gets divided between you and the network. You'll see them advertised as percentages all the time. 80-20, 70-30, 85-15, 90-10. The bigger the number for you, the more money you make. So a 90-10 means you get 90% of that, and the network's going to keep 10. So a higher number equals a better deal, doesn't it? Well, no, not always. And here's a simple reason why. You see, a high split sounds great until you find out what it's bolted onto. Plenty of networks advertise a brilliant split and then they charge you a monthly membership fee, monthly technology fee, a professional indemnity insurance on top of that. And all of those can add up pretty quickly and eat up thousands of pounds a year. Meanwhile, another network offers you a worse split, but everything's included. No membership fee, no tech fee. The PI is completely covered. So here's the trap in one sentence. A 90% split with 300 quid a month of hidden fees can leave you worse off than an 80% split with nothing to pay. The headline split is the bit that is put on the poster, but the fees are the bit that they mention quietly once you're actually interested. So never, ever compare networks on the split alone. Ask one simple question when you're talking to them instead. Once every single fee is taken off, what do I actually keep? Make them give you the numbers in writing, the real thing. That's the only figure that really matters. And it's almost never the one on the poster that they talk about. The second thing is the overselling of leads, if that happens. You see, some networks, they offer lead generation, lead sharing, or introducer relationships. And it can be a genuine bonus in some cases. But this is the hard truth you need to understand with this. The leads a network gives you are rarely enough to build any real business on, and they're often leads nobody else wanted. If a network's main pitch is, we will give you leads, be extremely, extremely skeptical, because the brokers who thrive don't rely on network leads at all. They build their own. They build their own referrals, their own introducers, their own content, their own brand. And let me be really blunt with you for a second on this one. If you are choosing your network based on split and leads, you're thinking like an employee, not a business owner. Employees optimize for this month's pay packet. Business owners, they optimize for still being here, still being safe in 5 years' time. The split and the leads are the employee questions. Now let's talk about the actual business owner questions, which are the two things that the networks notoriously will always undersell. Here's the part that new brokers massively underestimate and experienced brokers obsess over, okay? Compliance. When you are authorized under the network, you're responsible for making sure you advise correctly. They check your files, they review your cases, they train you in some cases, and they keep you compliant with the FCA. And with Consumer Duty in full force, that scrutiny is heavier than it has ever been. So let me show you what good and bad actually looks like, because good compliance support sounds abstract until you're actually living it. So here is bad compliance. It's a Friday afternoon. You've got a complex self-employed case that has to be submitted today, or your client's going to lose the property they've fallen in love with, and you need signing off from your compliance line. So you ring and nobody picks up. You email, nothing comes back until Tuesday. That delay just costs your client their dream home, and it costs you the referral, the reputation, and probably the protection business that came with it as well. But here is good compliance. You ring, someone picks up, they know your name, they look at the case, they spot the one thing you've missed, they sign it off, and it's submitted by 4 o'clock. Client is thrilled, you look like a genius. That difference, that exact Friday afternoon, is what you're actually paying for. Not the split when you're choosing a network. The quality of compliance support should weigh more heavily than the commission split itself, because the split affects the year's income, but the compliance affects whether you actually still have a license in the future. Ask every network exactly how their file checking works, how fast they can turn around cases, and how accessible their compliance team really is, as well as their financial promotions team. Then ask brokers already inside the network whether that's actually true. Now let's talk about exit terms. The second thing networks undersell massively is how to get out. Yes, you can switch networks, and plenty of brokers do it all the time. Brokers move networks constantly, usually chasing better support, better technology, or fairer exit terms. But leaving isn't like cancelling a phone contract, which is exactly why you need to check the exit terms before you ever join, not after. Leaving usually involves a notice period, often 1 to 3 months. You'll need to transfer your client cases carefully and compliantly. There can be clawback clauses where commission gets reclaimed if a case falls through after you've left. And you need your new network or your DA permissions lined up before you go, so there's no gap where you're not authorized to actually trade. See, the brokers get stuck are the ones who signed up without reading the exit clause. This happens, by the way, all the time. Read the exit clause as carefully as you can. A mortgage network confident in its own value won't trap you. A network that traps you is telling you exactly how little it rates its own service. So how do you actually choose one? Well, don't compare on headline split. Score each network on your shortlist out of 10 across these 7 areas. The real net position after everything. Make them itemize it and give you the number that actually lands in your account. Compliance quality, file check process, turnaround times, how accessible the team is, what current brokers actually say. The lender panel, how wide is it? Is there any exclusives, whole of market, or is it restricted slice? What is it? The technology, what CRM and sourcing tools are included, and are they any good? The training and development is another one, especially around protection, because that's your income engine. And oftentimes, by the way, it's usually pretty poor. The culture and support is another one. Do you get human on the phone when it matters. Talk to brokers in the network, not just the salespeople. The exit terms, notice periods, clawbacks, anything that's going to trap you. The winner is rarely the one with the flashiest split, as I've said. It's the one that's solid across all 7 of these. So like I said, we're going to go for a quick list now of the red flags that this should make you walk. A network that only talks about the split and goes vague on compliance. That's one. They are selling on price because they've got nothing else to sell. A network that leads with leads as the main reason to join. A network with punishing exit terms, long notice periods, clawbacks, clauses that make leaving extremely painful. There's a few networks out there that do that are in the list that I mentioned earlier. A network where you can't speak to existing brokers or the ones you do speak to seem evasive. A network with hidden fees that only appear after you've signed. Always get the full fee schedule in writing first before you do anything else. A network that pressures you to sign quickly. Pressure means they need you more than you need them. You trust your gut with this. If it feels off in the sales process, it will feel 10 times worse once you're locked in. So are networks worth it at all? Or should you just go directly authorized? Well, for a brand new self-employed mortgage broker, yes, almost always. Compliance safety net, the lender access, the support, the authorization, they're genuinely valuable when you don't know yet what you don't know. Running your own compliance from day one is a fast way to make it a career-ending mistake. But a network is usually a stepping stone, not a forever home. As you grow, as you understand compliance properly, as your volume climbs, as the math starts to shift, at some point, the slice the network takes may become bigger than the actual value it provides. And then going directly authorized, keeping all your commission, it becomes a smart move for the right broker. But the right path for most brokers is simple. Start with a network, choose a good one, learn the craft and the compliance, then go directly authorized if you are genuinely ready. Don't rush to go DA before you can handle it. But also don't stay in a network forever paying for safety net when you've outgrown it as well. Choosing your network is the first step, but after that, you then go into the career. And one of the hardest bits is that first year as a mortgage broker. So if you want to know what that's like, check out this video on screen where I break that down in a lot more depth.